What is up, everybody? It's a stable ad. It's December 22nd. It's a holiday week, and it's going to be a light week for me in terms of producing content because hopefully most of you are at home around the world celebrating with your family, whether you celebrate Christmas or not. It's generally pretty globally accepted holiday time for people, whether you're out there skiing in the slopes or just hunkering down with family, just hanging low. Hopefully you're having a good week and a relaxing one. It's also a short week in terms of markets, so we'll keep it a little bit light this week. Today I'm going to talk a little bit about kind of just what's happening in the macro that I just find to be interesting right now. I'm going to talk a little bit about what's happening in DeFi with Uniswap's Fee Switch and how they turn that on. And then we'll get into some of the APYs and some of the investing opportunities that I'm looking at and just exploring in general. Nothing that I'm putting money into, but I've been kind of looking around at some higher risk allocations just to wrap that portion of my portfolio up, which I plan on doing. So we'll kind of get that towards the end. Without further ado, let's get into it. So we're in a sort of like a strange place in this. I don't even want to call it a cycle, but in the markets where we're at now, where I feel like we have a camp, 50% that's sort of, maybe it's a little less than 50%. I don't know. I'm not talking about crypto. I'm talking about markets in general, where they're firmly entrenched into the I don't know if you'd call it a bearish or just the expectations of a correction. And then you have the rest that are in the expectations of this or something similar to this continuing into the new year. And I'll kind of go through what I mean and what I've been sort of diving into. And the first is that right here, we've got gold and silver at new all-time highs. This is this is a big deal, right? People have been calling for a gold to rally for years. It's finally done that. It's almost at $5,000, or it's inching its way up there. Whether or not we're kind of at the top or not, or near it, or if momentum carries us through $5,000, that's sort of yet to be seen. I just for the record, I have sold some of my gold that I've been holding on to for a long time, just because I feel like we're closer to a top than we are to a bottom, but I do have some still for exposure if we keep going up. Silver is one of those, it's been a dog forever, and it's really interesting to see that it's just completely blown through all-time highs, and it's looking like the momentum is going crazy there. The people on the top that are calling kind of for a top of this are saying that we're starting to get calls from our retail friends about gold and silver. And that's generally a sign, right, that you're getting closer to that sort of euphoric stage. And silver is really an interesting one because silver it looks affordable, right? At $60-something, it looks affordable versus gold that doesn't look affordable at over $4,000. Again, that's, as most of us know, that's just it doesn't actually mean what the things are valued at. It's just the actual price ticker. So something could be $4,000 and cheap, and something could be $60 and be very expensive. But retail loves that, and it looks like from a retail perspective, they like look at silver like, I could get into this, I could buy a bunch of this, and it looks like they own a lot of something that's valued right. So could this keep going higher? Totally could. Who the heck knows? But we've got gold all-time high, silver all-time high, S&P, NASDAQ, and Dow near their all-time highs. And Bitcoin is down 28% from its peak. And all these sort of bearish folks have been kind of saying that right now, liquidity, Bitcoin is the most liquidity sensitive asset that we have. And so their argument is like, it's basically front run and showing its hand that the market is going to drop. Bitcoin is showing us the way first, and the rest of the market's going to basically follow. And the only thing that's maybe going to be safe here is bonds. I don't know that that's the case, but that's what they're arguing. Another thing that they sort of point to here, which is really important thing to look at, and if you just looked at this chart, I think their argument makes a lot of sense. This is borrowed dollars, basically. Since the financial crisis here in 2008, when we took a small dive, it's been nothing but up. That means that people aren't selling their stocks. They're borrowing against their stocks, holding them forever, and spending outside of that, whether they're leveraging down and buying more. What it just essentially tells us is there's a ton of leverage in the system. There's a ton of leverage in the government, right? There's a ton of leverage in private sectors. There's just a ton of leverage in the system. There's a ton of credit card debt in the system, and there's a ton of college debt. There's all kinds of debt. Our country in the United States is run with this debt. The economy is hanging on this debt, and so the bearish take is that this is coming down. We're overspending on AI. The margin's out of control. Things have got to correct at some point. You don't even need to say that we're super bearish and we're talking for like the top of the century. It's just like, hey, a correction, a revert to the mean, some sort of correction is on its way and coming, and I'm getting ready for that, is what the bears are saying, or at least what the correction folks are saying. And the other people are saying, wait, well, hold on a second. Bitcoin is not really showing you that. Bitcoin is just in this really weird range where it's stuck. We've got massive amount of hedge funds that are hedging their bets, both short and long, and it's stuck between this $85,000 range and $90,000 range. And most of these expire next week, heading into the new year when all this sort of tax loss harvesting and selling is done. And we've got a different set of buyers that are coming into the game here. You had a ton of people that were selling, OGs that sold at $100,000, and we have new buyers that are coming in here. And now we have JP Morgan and all the big banks that are saying, we're going to let you use Bitcoin as collateral for loans. And so maybe we're going to start to see this same kind of thing here, this trend here, where instead of it's stock markets that we're taking loans out on, we're taking loans out on Bitcoin. And what happened when in 2000, from the financial crisis till now, is the stock markets have ripped in part because no one's selling anything. And if the same thing happens with Bitcoin in the new year, and you have this new buyer that's not a OG, that's not a degen, that's people that are going to buy this and hold it because they don't know what the US dollar is going to do, they don't know what currencies are going to do, they don't know if China's going to win these things or US is going to win these things, if US is going to keep the reserve currency. I'm going to hedge that and hold Bitcoin, and I'm going to borrow against it. And the bulls are saying this is what's going to happen over the next 20 years. And yeah, we may get a bump down to 75,000, maybe even 65,000, but we're not being cut in half from here. We're going up from here in the long run. And then the other sort of thing that they're pointing out, right, of course, is that Trump is going to pick a new Fed chair. And I know they're supposed to be apolitical, but this seems pretty political. And if we have a Fed chair that's aligned with Trump and whose goals are to lower interest rates so that the interest on U.S. debt is more affordable, and they're just going to print money. Money goes, the money printer goes burr, liquidity goes in the system. As they say, Bitcoin is a liquidity sensitive asset, and we've got this scenario here where in every single cycle of quantitative easing and money printing, we've had Bitcoin and crypto markets do really, really well. Risk on assets do really, really well. So it's just a really interesting thing. I'm looking at this from a high level perspective. The beauty of building a stablecoin investing portfolio is that none of this really matters all that much, because I'm trying to build a portfolio that's going to last whether you have down markets or up markets. You're making cash flow. This is something that I've been hunting for the last 10 years, a market and an investment strategy that brings me cash flow. I have things that accrue value, but I want cash flow. I want cash flow to replace my business. I want cash flow so that I could retire at some point whenever I want to. And that's the holy grail. And that's what stablecoin investing is allowing me to do. Just as an aside, I share all those deep dives over here on Substack. This is my full portfolio that I share here. I share all the moves I make. I share all the allocations I have, as well as subscriber paid tools and all kinds of stuff over there on Substack. So if you want that, that's over there. Another thing that I wanted to chat about today is Uniswap, what's going on over at Uniswap. Now, Uniswap has been talking about what they call the fee switch, right? So it's flipping on their fee switch for years. And this is kind of like the equivalent of an equity, a publicly traded equity that decides to start paying a dividend. Okay, we're doing well, we've got cash flow, we've got product market fit. We may have we feel confident with our moat, whatever it is, and we feel confident that we can start paying a dividend. And it looks like this is a done deal. The unification vote on Uniswap's Agora platform surpassed 40 million. The unicorn with over 69 million in favor for more than 6,000 addresses, nearing 100% support. So what does this mean? From a Uniswap token perspective, and just full disclosure, I do hold some Uniswap. From a Uniswap token perspective, the token becomes deflationary right away. It's going to burn 100 million uni, tokens worth 620 million, and direct fees from its V2 pools and some select, probably the larger V3 pools, and Unichain to the automatic burn mechanism, which you can explain it all here. And this essentially basically puts fees and revenue into the token holders' pockets. Whether this actually accrues value to the token itself, TBD, right? We'll have to see if that happens. But what I think this means from our perspective as stablecoin investors is this is a trend that I think is going to continue. And I think it's likely that every single DeFi platform does something like this. We've seen the Coles, we've seen the influencers and the folks in crypto Twitter talking about the only thing that matters to them from a token perspective is buybacks and fees, because the high float inflationary tokenomics has destroyed crypto and made it completely almost uninvestable for most people. And this is I think a signal for a larger change that is happening. And what this could mean, I don't know if this will. I don't know if this is ever going to drive a bull market like what we saw in DeFi summer of 2020, but this could help build some momentum, even if it's quiet momentum in DeFi growth. It could drive builders back to DeFi. We have regulatory clarity. We've got fee switch. We've got product market fit. I mean, DeFi really is the only thing that has had steady cash flows no matter what the market's been like, both bearish and bullish. And so I think we could end up seeing a little bit of a resurgence in DeFi, building, which could signal better APIs for us, stablecoin investors, rewards for us, stablecoin investors, maybe airdrops and things like that. So these are things that I'm kind of paying attention to broadly. But I think this is a kind of a cool thing if you're a Uniswap holder. But I think as a larger kind of DeFi trend, and hopefully just a crypto trend in general, for our token's sake. If anybody holds tokens, it's been pretty miserable. It would be nice to see these things kind of start to accrue value by becoming deflationary and share in the revenue of these protocols that most of us love so much. That's it on the DeFi front. Let's get over to the APY side of things. So again, none of these things are things I'm investing in, just sort of stuff that I'm looking at while it's the kind of holidays over here and my kids are yelling in the other room. I like to look at APYs while they're yelling at me. So the first thing I notice, I'm not on hype. I've never been a hype guy, but there's a lot of folks over on hype. There's a lot of building on hype. There's a lot of hype about hype. Who knows if it has staying power? That's sort of yet to be seen. But here's $5.5 million in this Grow IHF thing over here. It says paying 107%, but in reality it's paying 72.93%. And basically they're trading future contracts on the highest yield strategies. So this is super high risk. If I did anything in here, if I decided to bridge money over to hype, because there is some interesting things going on over there, this would be a really, really small play for me. This is a super high risk play. But, healthy APY, very healthy, juicy APY at 72.93%. Generally, when you see APY that high, it's high risk. So that would be, I would probably size this one at something like 0.5% to 1% of the portfolio, because I'm trying to diversify that out further. The max percent for a high risk play for me would be 2.5%, but I would not go anywhere near that on something like this. All right, let's go back over here. Just glancing around in here, I'm not seeing anything really insanely interesting, but I have noticed a couple of new stuff, right? So the first thing here is max APY. This is pretty new. I think they launched their V1 over here April. Yeah, so super, super new. And in fact, right now you can't even, I think that you can only withdraw right now. They're making some upgrades to the platform. So you can't even deposit here, but just something that I'm kind of looking at, right? So this 25% APY over here, it's autopilot yield. They optimize over here. So it shows right here, 1,000 high yielding strategies automatically. You do absolutely nothing. So this is kind of like auto on super high risk to me. But here we go. We got Yearn, Beefy, Convex. So they're sort of playing in the same space that Tokamak, formerly known as Tokamak Auto, is doing. I think it's just a lot more sort of high risk and a lot younger. They do have audits, and I may end up doing a deep dive on this. If I do invest, I'll do a deep dive on this, and I'll point to it here, or maybe do a video on it. But that's if I do invest. But it's just something I'm looking at that's interesting, and it hasn't even opened up the deposits yet. So just something to keep an eye on. And here's their Twitter, max_APY. And one of the another ones that I saw was this USDU USDC pool on Curve. This is on mainnet, paying a pretty hefty reward over here, 28 to 71% Curve rewards. So I haven't done a deep dive on USDU. I have rated it, and it's something that I'll definitely look at and consider. And if I do, maybe I'll do another a little deep dive on USDU at some point. But again, something I'm eyeing over here on mainnet. Peapods has been really, I really like what Peapods does, and this is on mainnet. I think their APYs dried up over on Base is where I think I really originally had them. Yeah, Base over here is where I originally had a position for a while, and I don't know that I want to put money in a high risk. This would be a high risk play over on Ethereum, because I put specifically bridged money back over to Ethereum so that I would play in low risk positions that I didn't have to move in and out of. But this has been a pretty consistent vault over here, and so I may consider putting a really small position over here, because I have a fairly large position over on with USDC over on Aave that I wouldn't have to swap anything. I would just deposit over here. So I may consider doing that. Something I'm looking at. I just want to explore a little bit more how long this has been fairly high APY for. The last thing I want to mention is just I have been looking at Katana a little bit. Haven't deployed anything over there. I don't think that I will in this sort of bearish environment, but I am exploring it in case the environment does get a little bit better, because you see over here on Spectra, which is kind of like a Pendle style clone, they've got some nice pools over here. USDC at 13.95%, USDT at 14.47%, and then Agora's AUSD at 15%. These are small pools, 200,000 here, 343,000 here, and this one's the bigger one at almost 2 mil. But February 26, 13.95% fixed rate, not too shabby over here. So if I did decide to bridge something over to Katana, that's something I'm looking at. Anyway, that's the update for today. If you want to, like I said, if you want to follow my exact moves, I am sharing that over here, okay, of course, on Substack. And I mentioned this specifically today because I am going to increase the fees for the paid subscribers over here on Substack. And if you sign up before January 1st, you will be grandfathered in to the $5 a month. That's all it is. It's $5 a month over here if you sign up before January 1st. If it's after January 1st, I'm going to increase that to $15 a month. I'm just doing a ton of research over there, and I think doing really kind of institutional grade style investing, and I think it's worth more. So if you want to sign up for that, you get my full portfolio, full allocations, everything I'm doing, plus all these tools that I'm building over here, where I do I basically upgrade these all the time. These are all like my protocol risk, stablecoin risk, and I'm also adding, which should come in the new year if not even sooner, a DIY build your own portfolio which is basically a fancy Google sheet that has my risk parameters in there, which you can customize to your own risk parameters, or you can use mine and build your own portfolio how you see fit. So that's all over here for paid subscribers, and I keep building new tools over here that are coming in the new year. I'm going to be doing a lot more stuff. So if that is of interest to you, go check that out over on Substack. Until next time, have a great holiday week. Whether you celebrate Christmas or not, have a fantastic holiday week. Hopefully you're relaxing with some eggnog and chilling with the family. And until next time, I'm the Stable Lad. Stay stable, my friends. I'm the Stable Lad. And if you like today's video, please hit that subscribe button. Every week I break down what's happening in the world of stablecoins and why it matters, clearly, calmly, and without the hype. This channel is for educational purposes. It is not meant to be financial advice. So always do your own research and manage your risk wisely.